REITs explained. How to invest in real estate with $100. Most people think you need hundreds of thousands of dollars to invest in real estate. They're wrong. And today I'm gonna show you how to own a piece of actual real estate for less than a fancy dinner. Welcome back to the channel. If you're new here, we break down money stuff that actually matters for people like us. So hit that subscribe button because today's video is about to change how you think about real estate investing. Here's the thing. Real estate has always been the rich person's playground. You need a down payment. You need good credit. You need to deal with tenants, toilets, and termites. That's why most people never touch real estate investing. But there's a back door that nobody talks about. And it's been around for decades. It's called a REIT, R-E-I-T, Real Estate Investment Trust. So what actually is a REIT? Think of it this way. Imagine you and your friends pool money to buy an apartment building together. You don't have to deal with the tenants because a professional management company handles everything. All the rent money gets collected, expenses get paid, and whatever's left gets split among you. That's basically a REIT, except instead of your 5 friends, there are thousands of investors. And instead of one building, you own a piece of dozens, sometimes hundreds of properties. Here's why this is genius. A REIT does all the heavy lifting. They find the properties. They manage them. They handle the maintenance. You just sit back and collect your share of the profits. The IRS actually requires REITs to pay out at least 90% of their taxable income to shareholders. That's you. Which is why REITs pay some of the highest dividends you'll find in the stock market. Let me give you real numbers. Realty income, ticker symbol O, is literally called the monthly dividend company. They've been paying investors every month for over 25 years straight. If you invested $100 just 6 months ago, you'd already have real dividend payments hit your account. Not huge amounts, maybe $1 or $2. But that's completely passive income just sitting in a brokerage account. Then there's Welltower, which owns senior living facilities and medical office buildings. Or Alexandria Real Estate, which owns biotech and life science properties. These aren't tiny little operations. They own billions of dollars in real property. And you can own a piece for the price of coffee. Now let's talk about the different ways REITs actually make you money. There are 2 buckets here. Bucket 1. Dividends. This is the income stream. REITs have to distribute that 90% to shareholders. So you get regular payouts. In a Roth IRA, which you should definitely be using if you're not already, those dividends grow tax-free forever. In a regular brokerage account, you'll pay taxes on them. But that's the trade-off for access. Bucket 2. Price appreciation. As real estate values go up, the REIT's stock price goes up too. So you're not just getting paid dividends. The underlying value of what you own is increasing. Over the last 10 years, some REIT indices have returned over 8% annually. That's solid. Here's what you need to know about risk though. REITs are more volatile than bonds but similar to regular stocks. When the stock market gets shaky, REITs can dip. During COVID, a lot of hotel and office REITs got crushed because nobody was traveling or going to offices. So you've gotta pick the right ones. Industrial REITs that own warehouses? Those crushed it during COVID because everyone was ordering stuff online. The point is, diversify within REITs. Don't put all your money into one REIT. Better strategy. Buy a REIT ETF or mutual fund that holds dozens of different REITs across different property types. You can literally open a Fidelity or Robinhood account right now, fund it with $100, and buy shares of REIT funds. The most popular is VNQ, which is a Vanguard ETF holding like 200 different REITs. Or Schwab's SCHH, or iShares XLRE. All solid options. My personal take. Put REIT exposure in your Roth IRA first because that dividend income grows tax-free. Then, if you want real estate exposure in your regular brokerage account, go with a diversified REIT fund, not individual REITs. The bottom line is this: you don't need to be rich to own real estate anymore. You don't need to be a landlord. You don't need to deal with any of the headaches. For $100 and 5 minutes of setup time, you're now a real estate investor. If this helped you understand REITs, please smash that like button. Drop a comment telling me which REIT sounds interesting to you. And most importantly, subscribe because next week we're breaking down how to make your Roth IRA work for you even harder. Thanks for watching. Let's build wealth together.